Hi, so Charlie giving you Monday's video, and I hope you're very well. Before I go through the stock indices, there's two things I want to go through. One is I'm on Tip TV next week, and I could do with one or two extra interviews. If you're interested in being interviewed with me, you've seen the other videos on our site, then do get in touch. Email sam@easytrader.com. And just say yeah, I'll be happy to be interviewed. It's next Tuesday lunchtime down in London. So sam@easytrader.com next Tuesday. I'll speak to you beforehand, and we can go through everything. And the thing is, I can't even write. Anyway, sam@easytrader.com. But the thing is with this is, I'm happy to interview. Even if you've only been trading, let's say 6 months, we can talk about your experiences that you've been gaining and had in that time. It doesn't have to be you've got to be a successful trader. I like to have interviews with all sorts of people from different backgrounds about why they've got into trading, what they're trying to achieve with trading, and their experiences. You know, so it could be you've only been trading 6 months, you could have been trading 6 years. And again, it's about, I want to hear the juicy gossip, I want to hear the juicy stories of what you may or may not have done. So if you're interested in being interviewed, then do get in touch with Sam, and I'll interview you next week on Tip TV. That'd be great. Right, that's the first thing. The second thing is, I've had an email come through from another trader, and I'm getting a few of these periodically, saying he was interested in trading for one of these prop trading firms at some point. Now, if you remember, I've interviewed Viet Dang, who's trading, fun enough, for a proper prop trading firm over in Germany. But I have to warn you, lots of these prop trading firms in the UK are not really prop trading firms. You know, where they say, look, you can come and train with us and trade our money and all of that. It's just, there's just a different way of being a trading educator, and they call themselves trading prop firms. You have to be really careful, because you think you're going to, oh yeah, that all sounds good, and all that happens is you have to pay them a load of money in order to train with them. They make you all these promises, and then maybe you get to trade some money. But what they effectively do is they'll put £1,000 into a trading account, margined up so it looks like it's 50,000, and they'll have you trading at such small amounts you can never actually make any money with them. That's generally what happens. And I found this was another email from that was sent over from a customer, a client, or someone on our database, who'd sent it to Sam and said, "Oh, what do you think of this?" And it's got an advert, junior foreign exchange trader, 25,000 to 110,000 pounds a year, etc., etc., depending on performance. Okay, fair enough. All sounds good, yeah. And oh yeah, our client manages a fund with and you read all the way through it. The problem is, the reality is, guys, you have to just get into the real world. Would a fund, any sort of half decent fund, realistically just want to take a random person off the street, give them a month's training, and actually then want them to trade their money for them? You wouldn't. You would actually, any funds, when I've traded for any funds, you have to give them 2-3 years track record. Track record, not just trading for 2 or 3 years. You've got to give them a track record of your performance. These sorts of houses where they say, yes, we'll train you and then we'll trade, and then you can trade our money. Do you really think if it was really 50,000 or 100,000, what they do is they margin it. They'll just put 1,000 or 2 into an account in order to give it a £50,000 worth of margin. But they'll, it's not real. Any proper fund would never just take someone random off the street with no prior history. And so anyway, to get to the crux of the matter down here, let's bring the pen up. When it says, please note, training fees apply due to the extensive nature of the training. Fair enough, you get a load of training on the back of it, but it's just another trading way of being a trading educator. It's a different slant on your marketing. Sounds really cool, yeah, trader, you can do all this, and people think, yeah, fantastic. The majority of these things, that's all they are. It's just another way of paying for a trading education. They're no different, and some people say, well, it's okay, I don't mind doing that, because at the end of it I'm going to trade their money. Well, I'll tell you, we've got clients who have been there, seen it and done it. We've got clients in our trading rooms who have said, yeah, I did that, and this is what actually happened. Yes, they put 50,000 into an account. They made you trade so small you can never actually make any money of it, and you end up getting disillusioned, and you leave. And that's it. And they've made their money by charging you for training. There you go. So that's in answer to that individual. There you know who he is, because I said to him I'll put it into the video. But the reason I answer these questions sometimes when it's just an individual, because I know that if one person's seeing this sort of stuff, then I know that other people are seeing that. So and you have to just sort of try and read through it. Realistically, if I was going to run a fund and I had monies that I wanted other people to trade, I would want those people to have good track records over a decent length of time. I wouldn't just take someone on and then say, yeah, I'll train you for a month and there you go, there's all my money, you can go and trade it. Let's be real. Right, now for another email that's come in, and the individual asked, Charlie, on Monday could you have a look at the S&P, and because he's trading the S&P, and where do you think it's going to next? Well, this is the daily chart of the S&P. Let's actually go out to the monthly charts. Let's take it out a bit higher, see if I can get it out to a monthly chart. There we go. So we're right up near the highs again on the S&P. I think what we have to be careful of is the amount of bearishness that's been out there in the market. Let's take this back to the daily chart now. And yet the market's held up. And the way that it's looking right now, the way that it's come back up, it's got quite close. This is now a weekly chart. If it had started falling back a few weeks ago and had got down below its weekly 21 moving average, then yes, I would have then started looking back down to these lows. And maybe these are still going to come into play at some point in the future. But for now, the path of least resistance is to the upside. We've got back above the weekly 50 MA. We're above all the moving averages in general. The path of least resistance looks like it's to the upside. So from my view is that the S&P should want to break, and at least break to new highs here over and above the 2015 highs. We'll see. I mean, I don't know. I haven't looked to see yet if there would be any sort of divergent activity if it does break to new highs, if it's diverging up there. I'm not even concerned about that at the moment. But as it currently stands, the way it's holding up, it looks more likely that the S&P and therefore the likes of the Dow are going to have more upside in them, considering they're getting up there. Now the Dow has been underperforming the S&P, so this is the Dow's chart, so it's not quite as high as the S&P, but overall they're still fairly close to these highs. And it's a bit like, if I take us back to the S&P actually, it's a bit like when you take it back to the weekly chart, when you keep on nudging against a high, at some point you think, well, it's quite possibly therefore going to go for a breakout, because it's just like it keeps on pushing, and then at some point it's going to break it. So as it currently stands, it's consolidating on the daily. So it's back to the daily chart of the S&P here, not really doing too much over the last several days, but at some point maybe it cools off a little bit, but it's still holding overall. It still looks to me that at some point we're going to break to new highs on the S&P. We have to watch for divergences amongst indices though. So like I said, the Dow's not quite there. Let's see if I can find the we've got the Russell here. Actually, the Russell, let's take that out to a weekly chart as well. It is a bit lower. It's not, it's come up quite well, but it's not quite as high as its 2015 highs, as close as the S&P is. And let's have a look at the Nasdaq as well. Nasdaq's not too bad. So there's a little bit of divergent behavior amongst some of the indices, but they're all there or thereabouts. So it still looks like the S&P at least could well want to break new highs. I shall leave it at that. Have a great week. Back on Friday.